In this tutorial, we are going to talk about IND AS 40 investment property. This IND AS applies to listed company, banks, NBFCs, insurance companies, provided their net worth exceeds a certain limit. Let's start with some basic questions. So, what is an investment property? Let's understand it with the help of an example. Suppose an entity has a land and a building. It gives the building on rent, and in return, it will earn rentals. It keeps the land expecting that it will appreciate in the future. From this example, we can get an idea that investment property is a building or land held to earn rentals or for capital appreciation. With this definition, some more questions come in our mind. Like, what happens when you have a building and one of your floors is rented and the other two are self-occupied? In this case, we can split the space given on rent and the space that is self-occupied. So, the treatment for a floor given on rent will be done under IND AS 40 investment property, whereas other parts of the building will be categorized under IND AS 16 plant, property and equipment. But what if we are unable to split them into owner-occupied property and investment property? In that case, we will look for what purpose the property is held significantly. If an insignificant portion is used as investment property, then it will be treated under IND AS 16 plant, property and equipment. But if an insignificant portion is used as owner-occupied, then it will be treated under IND AS 40 investment property. Till now, we have discussed the meaning of investment property. Now, let's look into its recognition requirement. So, when will investment property be recognized in books? Recognition is to be done when it is certain that future economic benefit will flow to the entity and the cost of the property can be measured reliably. After we are done with recognition, we have to understand at what value our investment property has to be measured. It will be measured at cost plus the directly attributable expense. But it is to be noted that abnormal losses, operating losses and startup cost will be excluded while calculating the cost of property. What will happen if payment for investment property, instead of being made in lump sum, is being deferred and paid on later dates, let's say monthly? What is to be done here is that the total payment will be discounted and the discounted amount will be taken as cost in the books. The difference between total payment and discounted cost will be treated as interest. Suppose you have a building as investment property and you want to exchange it with another property, let's say a car. Treatment of investment property acquired through exchange of assets can be clearly understood by taking up 4 situations. Situation 1, where fair value of building as well as fair value of car both are available. In this situation, the difference between the fair value of building and car will be settled in the form of cash. Also, P&L account will be debited or credited by the difference between fair value of car and WDV of building. And the recording is to be done at fair value of car. Situation 2, where the fair value of the building is not available but the fair value of car is available. In this case, cash settlement will not be possible because the fair value of an asset is not available. Also, P&L account will be debited or credited by the difference between fair value of car and WDV of building. And the recording is to be done at fair value of car. Situation 3, where the fair value of the building is available but the fair value of car is not available. In this case, cash settlement will not be possible because the fair value of an asset is not available. Also, there will be no treatment in P&L account. And the recording is to be done at fair value of building. Situation 4, where the fair value of building as well as the fair value of the car both are not available. In this case, cash settlement will not be possible because the fair value of both the assets is not available. Also, there will be no treatment in P&L account. And recording is to be done at WDV of building. Until now, we talked about recognition. Now, let's have a quick look into derecognition. Investment property should be derecognized on disposal or permanently withdrawn from use and no future economic benefit is expected from the asset. Other terminologies under this arrow graph are common and we will discuss them in some other IND AS tutorial. Here, let's try to understand about disposal. The disposal can be achieved by sale or by entering into finance lease. The difference between the carrying amount of investment property and net proceeds received by performing sales or by entering into finance lease will be debited or credited into P&L account.